Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Hari, and we are going to be finishing up on DraftKings. So in our first part, I'd encourage you to listen to that if you haven't already done so, because that'll kind of set the stage for what we're going to do in part two of this episode. So in the first episode, we really kind of focused on, what does DraftKings do? They're a daily fantasy sports site. And, we struggled to kind of identify a moat for their business. I think it was largely around their brand. And, we had a hard time really justifying, a strong business here that had a long runway for growth. It was very unpredictable. And as value investors, we're not necessarily have to understand every business. And I would say that even though I'm, a sports fan and understand a lot about how, fantasy sports works and things like that, I don't really understand this as a business. I don't know that I am, 100% confident in, my ability to really predict the future with a business like this. And that doesn't mean that I'm so, that I should feel bad about that, right? Some companies are just in the too difficult to understand business. So you kind of just have to move on with how you think about it. So, with that being said, my focus here is just to really kind of understand the financials, and maybe in the future, as I start to get a better understanding of how this works, I may come back to a company like this and say, oh yeah, now that these issues that I've, identified or have kind of played themselves out better, the laws around sportsbook have kind of been adjudicated in courts and things like that. It makes a lot more sense to me to understand what's going on. With that said, let's dive into the financials and see if there is, a good, anything that we can take away from this. Even though we're not necessarily going to invest, today. So when we look at their revenue and user growth over the last, several years, to give you an understanding of what they currently have in terms of monthly unique players, from 2018, it was 600,000, and in 2019, 684, and in 2020, that was 883. So we saw about a 25 to 30% growth over a 3-year period. And a lot of that is based on changing, interest from players, the opening up of the sports book, and so on. And we saw in 2019, revenue was 320 million, up to 614 in 2020. But we saw a huge increase in the cost of revenue. And that was related to some tech expenses, sales and marketing spend, and increased in headcount. So their sales and marketing expense went up from 185 to 495, and product expenses grew by 201% from 50 to 168 million. And general and administrative expenses tripled from 124 to 447 million, which all led to an operating loss of 843 million, down from a loss of 146 million in 2019. So when we kind of look at that, there's a lot of concern here. I don't typically invest in pre-profit businesses. And I struggle with businesses like this because you have to value them on metrics that are not related to financials. And I don't believe that that's an accurate valuation methodology for a publicly traded company. It may have its place in the private business sector when you have a growing business that's, very early on. But, when you're a mature business, it's a little bit harder for me to really get behind it. So with that being said, how much cash do they have on hand? About $1.8 billion, which should give them a lot of runway for the next 2 to 3 years. If they're spending cash, they don't have any debt. So, we're not necessarily concerned about this company blowing up from a debt standpoint. but because they have an operating loss, there's no free cash flow that they're generating. We basically cross off the valuation, ability to value this business. So what I want to focus on then is, when you look at a business like this that is, has a big operating loss of 840 million, we still want to look at the cash flows and really get to, what is the actual cash outlay that they're spending on operations. And, their operating loss of 843 million actually includes stock-based compensation expenses. So, as you probably are well aware, stock-based compensation expenses are issuance of options to employees, but they're diluting the business. So they're taken on the income statement, but they don't have any cash outlay for the company. So that was 325 million that they had in terms of expense. And then they had some warrants that were disposed of that for 387 million. So their actual cash flow from operations was negative 337 million. So not as bad as the operating loss would have you believe. And so, we look at this business and say, okay, this is a business that needs to kind of clean up their act. And we need to see some, improvement, I think, in my mind, on the cash flow side before I would feel comfortable really even digging further at this point, right? Normally we would talk about management, we would talk about valuation, but it's really hard to, have a discussion about those things when, from a financial standpoint, you've kind of hit a wall, right? So when we look at our checklist, it's we start with the business, the financials, then the management, then the valuation. And from a business standpoint, I think every company, you will, as you walk through that, you may walk into a situation where you say, I don't understand this business, and you exit, right? And so the checklist is really designed to also minimize your amount of headache that you do when you're analyzing a business. If you get to a point where you say, I don't like what I'm seeing, or I don't understand what I'm seeing, you can always leave. Now I would have left, somewhere in the business section, because I look at this company and I say, I don't have any special insight here. I'm not sure that I have a really strong ability to measure what's going on in the future. But maybe you do, and maybe you get to the point where you get through the business side and you're looking at the financials and you're like, man, I really don't understand, a business that's losing money. How do I value this? Their user growth is, gone up by 25, 30%. And interestingly, their average revenue per month per unique player has gone from $31 to $51. So they've grown the revenue per user by 60%. But how many users can this business actually support? How many sports fans are actually going to also, bet or use, the daily fantasy aspects of this business? And how many of their users are going to switch from their current, method of, using the sports book, whether that's, the barbershop down the street, under the table, or is it, going to Las Vegas and betting at casinos? I don't have a good answer for that. I don't know what advantage they get by placing it online. I know several people who are, big fantasy or big sports fans. They have different methods of, for betting on the side or in their sports book. So I don't really know how DraftKings is really going to attract people over to theirs. Simplicity may be part of that, but again, there's competition that can also do these things. So, what competitive advantage do they really have? So really what I want to see is, from a financial standpoint, are they really making money? And if they are, then, I will be interested in looking at them, in the future. But today I don't really see anything there. So it's hard for me to justify it. And when I get into, the business market cap, this is a $20 billion company. by market cap that's losing, that has negative $330 million in free cash flow. Very hard for me to really justify any sort of valuation here, that would really warrant, further look. Now, maybe if there's a huge correction and this thing drops in value, or I'm sorry, drops in price, I would look at it and, again, but I'm really struggling, to do that. And one of the other things that really, crops up is that DraftKings is about to make a $20 billion acquisition offer for Entain, which is, is another gambling business. And, you have a $20 billion market cap. How are you going to justify that's not really making money? So acquiring more businesses that I feel is not in the best interest of the DraftKings shareholders, especially at a valuation that is so high. How do you really justify spending money on this kind of stuff? And so, I know we're not really going to get into the management side of this because I've kind of, frankly, lost interest in a business like this. But you do have to kind of wonder, what are they thinking when they're trying to make an offer like this? $20 billion, it's equivalent to your current market cap, and you're not really profitable. So how are you going to finance this? How is it going to be worth my time as an investor to really get into it? And you're trying to corner the market here, I guess, as part of this investment. But I don't really see how that's really going to, in a commodity world, you're not getting pricing benefits by that. It's really just name recognition, which you kind of already have. So yeah, I'm struggling with this, from a valuation standpoint, from a financial standpoint. What do I do with a business like this? So, the other thing that we didn't really cover in the last episode that I do think is important is, does the regulatory world, change if, things get out of hand, or if, if there are businesses like these have, data protection, privacy laws, if there are breaches and things like that, could this, impact a business that's already struggling with, on shaky footing. So to me, a lot of this is very difficult to understand, right? There's a unknown regulatory landscape out there that may impact their business or put onerous restrictions on their business, even though it would be considered illegal or legal in that state. If there are any privacy breaches or anything like that of sensitive information, what is the cost to them? As they are effectively a financial institution because they are hosting your cash. So those kind of things also add weight, or have to be accounted for in any financial decision making. But again, I don't have necessarily the best insight into how this could be valued. So it would be a struggle for me to really spend a lot of time valuing it. Okay. So, as we talked about in the last, episode, we're starting up the podcast again, trying to get back on track with our investing. And if you are interested in learning about a company or having us talk about it on the podcast, please email us at info@valueinvestor.org. You can also like, comment, and subscribe on this video on YouTube. That'll help us with the algorithm, get our name out there, so that we'll continue to make content. And also, if you have any questions, please reach out to us, info@valueinvestor.org, or if you have any suggestions for what other content outside of just companies you want us to talk about, we'd be happy to do that. We're always looking for ideas and love to hear from you guys. It's one of the best things about doing this, we don't make any money off of it, is when people email us and tell us, hey, I listened to your podcast, it really helped me understand these concepts, and now I've made my first investment. or I made, I sold my first stock, at a profit. And I really understood, what I was doing. It wasn't just gambling. It was really, I wasn't speculating. I was actually investing. So we love to hear those stories. We love to hear from you. So please, send us a email, info@valueinvestor.org, or comment on the YouTube video. All right. Well, that's all we have for DraftKings. And we will see you on the next episode. Thanks.